PUMA's strategic reset, navigating challenges and charting a new course. The sports giant's dilemma. In the third quarter of 2025, PUMA embarked on a strategic reset, addressing a myriad of challenges that threatened its long-term success. The company's journey is a fascinating tale of brand reinvention, but it's not without its controversies and potential pitfalls. Here's the inside scoop. Q3 2025, a reset year. PUMA's Q3 performance was marked by a 10.4% sales decrease to €1,955.7 million on a currency-adjusted basis, with reported sales down by 15.3%. This was primarily due to the company's strategic decision to reduce wholesale business, excess inventory, and promotions in the direct-to-consumer (DTC) channel. The move, while essential for brand health, significantly impacted PUMA's wholesale performance and DTC sales development. Wholesale business decreased by 15.4% to €1,385.7 million due to takebacks and actions to reduce exposure to mass merchants in North America and phase out undesirable business in Latin America, EMEA, and APAC. Mass merchants, with their focus on high-volume, low-price sales, were a significant factor in this decision. DTC business grew by 4.5% to €570.0 million, led by a 5.6% increase in e-commerce despite reduced promotions. Sales in owned and operated retail stores rose by 3.9%, with growth in full-price and outlet stores, increasing the DTC share to 29.1%. Regional sales decline. The reset initiatives led to a sales decline across all regions. In the Americas, sales dropped by 15.2% to €678.1 million, primarily driven by North America due to distribution cleanup initiatives. The Asia-Pacific region saw a 9% decrease to €367.1 million, with Greater China's wholesale business significantly impacted by reset actions, partially offset by DTC growth. EMEA sales declined by 7.1% to €910.6 million, mainly due to a softer wholesale business in Europe. Product divisions feel the impact. All product divisions experienced sales declines. Footwear sales decreased by 9.9% to €1,045.8 million, partially offset by growth in Sportstyle Prime led by the Speedcat family's success in APAC. PUMA's basketball and performance running categories remained resilient, supported by product innovations. Apparel sales declined by 12.8% to €635.5 million due to a drop in Sportstyle, partially offset by growth in training, motorsport, and basketball. Accessories sales decreased by 6.1% to €274.4 million. Profitability takes a hit. The gross profit margin fell by 260 basis points to 45.2%, reflecting increased promotional activity, inventory reserves, and higher freight costs. Operating expenses, OPEX, decreased by 2.6% to €850.6 million, but the sales decline led to a 570 basis points increase in the OPEX ratio to 43.5%. Adjusted EBIT, excluding one-time costs, decreased to €39.5 million, and reported EBIT came in at €29.4 million with a 1.5% margin. 9 months 2025, a tough ride continues. The first 9 months of 2025 saw a 4.3% sales decline to €5,973.9 million, with currencies negatively impacting sales by approximately €288 million. PUMA's wholesale business declined by 8.6% to €4,256.3 million, while the DTC business increased by 8.4% to €1,717.6 million, driven by e-commerce growth and a rise in owned and operated retail stores. Regional and product sales. EMEA sales decreased by 1.9% to €2,574.0 million, while the Americas and Asia Pacific regions saw sales declines of 6.2% and 5.5%, respectively. Footwear sales decreased by 1.1% to €3,292.9 million, apparel by 8.7% to €1,827.6 million, and accessories by 6.1% to €853.4 million. Profitability woes persist. The gross profit margin declined by 130 basis points to 46.1%, impacted by promotional activity, inventory reserves, and currency effects. Operating expenses increased by 2.8% to €2,670.1 million, leading to a 490 basis points increase in the OPEX ratio to 44.7%. Adjusted EBIT, excluding one-time costs, decreased to €102.0 million, and reported EBIT came in at negative €10.7 million with a minus 0.2% margin. Balance sheet and cash flow. The working capital increased by 2.2% to €1,924.6 million, with inventories rising by 17.3% reported and 24.3% currency adjusted to €2,124.1 million. Trade receivables and payables decreased, while net debt increased to €1,205.2 million. PUMA's free cash flow improved in Q3 2025 but remained negative, with a 9-month total of negative €685.8 million. The company is implementing measures to safeguard cash flow and optimize working capital. PUMA United, a strategic shift. PUMA United, a partnership with United Legwear, is considering a shift from a partnership to a licensing model in 2025. This move is part of PUMA's distribution network optimization efforts, with the business currently integrated into the region North America operating segment. Outlook for 2025: Navigating turbulent waters. PUMA anticipates significant challenges for the remainder of 2025, including muted brand momentum, channel mix shifts, US tariffs, and high inventory levels. The company confirms its full-year 2025 outlook, forecasting a low double-digit percentage sales decline on a currency-adjusted basis, an EBIT loss, and capital expenditures of €250 million. PUMA's potential: a rich history and credibility. PUMA's 77-year history with renowned athletes gives it a unique position in sports performance and culture. With an extensive archive, PUMA has products that have appealed to consumers for decades. The brand has credibility in various major sports, with leading partnerships in football, including Manchester City and Borussia Dortmund, and every match in Europe's top leagues played with a PUMA ball. Controversy: commercialization versus brand authenticity. PUMA's challenge lies in addressing its commercialization, which has led to muted brand heat and low distribution quality. The company aims to establish itself as a top 3 sports brand globally, focusing on becoming less commercial and more consumer-centric. But here's where it gets controversial. Is this shift away from mass merchants and a more consumer-focused approach a risky move in a highly competitive market? PUMA's actions: a bold strategy. PUMA's reset strategy involves cleaning up distribution, aiming for higher DTC growth, and seeking growth from brand-driven segments. The company is reducing its cost base by cutting white-collar roles and product range, and strengthening storytelling to better position its icons. PUMA is also focusing on football, running, training, and sportstyle categories, emphasizing performance innovations. Organizational changes: a new leadership structure. PUMA has implemented significant organizational changes, with Maria Valdez becoming Chief Brand Officer, responsible for brand marketing, product, creative direction, innovation, and go-to-market. These changes, along with the appointment of Andreas Hubert as Chief Operating Officer, create a clear redistribution of responsibilities among the management board. Looking ahead: growth on the horizon? While 2025 is a reset year and 2026 a transition, PUMA believes these measures will lead to growth from 2027.